Good morning, Scott Rudley, T3 Live. Welcome to today's morning call. So this is the Friday relaxed version. And when you woke up this morning, it didn't seem like we would have a relaxed version, right? Futures down 10, 11 handles. I do think most traders were excited by that. I know I was excited about that. I was a little short the spiders from yesterday. Felt as if after two big gap ups over the course of the past two sessions where we weren't able to hold it, where it was a better short than trying to be long even though we were oversold, you figured that we would get some type of gap down, some kinds of cleanse, some kind of move to an area that is a bit more compelling for potential swing type trades. Then lo and behold, well before GDP came out, I guess somebody knew something. It started, futures started inching up. GDP came in at 2% versus 1.8. A lot of guys are, playing the conspiracy card, saying that that it was manipulated because the president wants to get reelected. Same thing with that 7.8% unemployment, but whatever. Bottom line is we can't control numbers. We can't control what goes on behind the scenes. We can only control our keyboards and our approach. Another interesting thing was that all the headlines stated when we were down 10, 11 handles, futures down big based on the fact that Amazon missed and Apple missed, poor earnings, poor guidance. And then, you turn your screen on, Amazon's up $4 after hitting the 200-day last night, and Apple's up like $1 after hitting its 200-day last night. So for those of you on our VTF last night, you heard Sperlin talking, you heard me talking. There was a lot of opportunity after hours. If you had your levels in front of you, knew what the report was looking for, and you could have maneuvered. If you went with some kind of call spread or put spread in Apple or even Amazon, you probably lost. I lost on my call spread, and I think the guys in Chicago were probably out last night having some nice drinks because anyone who sold volatility or sold premium, which happens in a big event, they collected it, and like we've said many times, 80-90% of options go worthless. That's why you better have a strategy there. So if you take a quick look at the chart of the spiders, you will see, here is where we stand. We stand right around here. We're trying to hover, right where we broke out from that ECB news. The recent lows have been, 1405 on the SPX last night. We were well below this morning. I think we almost hit the 100-day, and I wish we were there right now. And I would say, I tweeted this morning, I said, down 10 handles, this is probably a spot to cover. I'm not sure exactly if it's the right place to buy because sometimes you have a weak Friday, it could go into Monday or turn around Tuesday or whatnot, and here are the two bigger compelling areas. But the important thing is making sure that you're not a seller into this. You're not finally selling your longs, because if you recall, 3 Fridays ago, this is when the market pushed you and failed on that 7.8% unemployment. Here is, the last Friday when on the Thursday Google was halted, IBM broke its 100-day, stocks were, breaking down, and lo and behold, this is not the spot, or if we were down 7-8 handles to finally hit things out. This is when the trend broke, and if you look at the Qs, it was even not much more omnious. On October 9th is when this pattern broke to the downside when we gave way to the 50-day, and that was the first time. And not only did it give way, it closed on the dead lows. So that was a sign of weakness, a sign that other indices would follow along. But anyway, you had to move lower, a retest, and then we are down to the 200-day. And I have the SMA and the EMA because both guys use it. So last night we were down here, down here, almost near 64-ish. When Apple and Amazon were trading in the hole, and now we're back to flat. So I think people would rather have the opportunity intraday to be able to buy this versus overnight. So that's why I still think this churny type action could continue. If you look at Apple right now, you will see that last night it tagged, and you had to be quick. I think I had a bid in at 577. It touched 585. This is where both 200-day moving averages are, so that's why I had 575 to 585 as my level to be a buyer. And then you could have bought it 596 into the 600s yesterday. Now it's somewhat flat. So my take on Apple is this, okay? You've had your 13% or so move to the downside. It's now been in a trend, okay? What you do is you see this descending channel created, okay? Do I think that 80% of this move to the downside is out of the way? Yes. Do I think that we could hover here, and maybe turn up and that could be the low? It could happen, but the same way we could see a retest of the 200-day at some point, during the day, which is what a lot of institutions like to see if it holds. So at this point, if you're a long-term macro Apple investor, I think the guidance of $11.50 for next quarter is a joke. It's going to finally be a point where Tim Cook could actually exceed it. So I think there will be a nice entry for me as a swing trader at some point in here, and then add once this descending channel, okay, because that's what this is, winds up getting complete, and then finally gets broken to the upside with authority, and then obviously you see some commitment to it, and then we get back to the upside as we head into the holiday season when some of the supply constraints will be out of the way. Tim Cook, he was, right, everyone billed him as the supply chain guru, and it's probably pretty ironic that that's what's been holding back sales and earnings, because it's definitely not the demand. Everyone wants an iPhone 5, and the iPads are going to be going off like hotcakes. So anyway, that's Apple. If you look at Amazon, you will see that it too last night went down as low as 204-ish. The gap started, or not even started, actually right around here, which was what was this, 206, and went $1 or $2 below it. I know Sperling had a really nice trade buying it in the hole, and then it took back the 200-day and then climbed all the way back up to where it is right now, up about $4 or $5. I don't think you need to be in a rush to buy it, but I wouldn't be in a rush to fade it either. Just continue to trade it. At some point we should get a pivot. The holiday season for Amazon will be good as well. They just discounted it a lot. It's below the moving averages. It's going to need some time to put in some better strategy. Yesterday's low is 222.92, so watch that if they try and bring it down. And again, this too might want to test the 200-day at some particular point, intraday, and then that would also probably coordinate to maybe the S&P at 1370, 1380, but we'll see how that goes. As far as the home builders, yesterday was your first shot across the bow, so to speak. I talked about a high level stop. This right here would have been a high level stop, but it's still really strong, still above all the moving averages. It could come all the way into the bottom end of this channel and continue and be fine, so I'd just be a little careful there. The banks also, I talked a little bit here how here is your high level stop in the XLF. Now it's trying to hover here above the 50-day. Watch this area as support. Facebook, remember those earnings? It came out, it was like 25 pre-market. Now it's coming into this gap. Now I would look for some kind of opportunity for it to turn around. Some money came in there, some shorts got covered. At some point, maybe you get some kind of red dog reversal where it trades below the recent low. Here's 22.47, comes in, reverses, and then maybe you could be long it versus a pivot of that low for it to then go sideways and then maybe continue, considering the size of this gap. But if it keeps coming into this gap and doesn't find a friend and fills it, you'll know that it was just a one hit type wonder. That's really it. It's Friday. The futures have been all over the map already. It would have been really nice if we were still down 10, 12 handles coming into the open. Would have set up for a better trade. Apple, Amazon, definitely worth watching. Now, I think things are going to change a little bit there. Like with Apple, we've seen these 15 to 20 point days, and same thing almost with, obviously Amazon a little less. It might get a little bit more constricted, a little bit more choppy. I don't think people need to be in a rush to buy Apple, but I don't think people are going to be shorting it with the same velocity that they had going into numbers. So at some particular point, something will give there. So just expect a little less. I know Priceline's up big, Expedia's up big. Take a look at those. Some guys are actually trying to trade IBM for some type of low here. This is actually my line on the chart. It's coming in to some big support here. It has a small little descending channel. So if it could finally break above that, maybe above 192.44, you get a move, some kind of retracement there. So at this point, I still think you remain tactical. I still think that this. I don't know if you covered your shorts already. I covered my shorts before the GDP. After when we were still only down 6-7 handles, I didn't get the bottom. Now I'm just going to keep trading. I'm going to keep trading until finally we get like a day one where we get some kind of outside day on mega volume, and then watch the leaders start acting better, and then we get that follow through, and then we go from correction into a more stable condition of market acting better and uptrend intact, and that's when I'll be back at Portfolio Approach. So until then, keep taking trades, keep making P&L, keep staying safe, and keep connecting the dots, because the dots over the past 3 weeks have been negative. There's been better areas to sell, even areas to get short, and the market's always telling you something. So have a nice day. It's Friday. Go into the weekend with a smile, and perhaps I'll see you later. If not, take it easy this weekend. If you're on the East Coast, watch out for that storm.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.